Hello and welcome everyone. Welcome to the Gold and Silver Club end of week review for the 30th of August 2013. Today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So during the live session we are going to be looking at an end of week summary for gold, silver, oil and the commodity currencies. We'll be looking at the top trades of the week as well as covering live market commentary and technical analysis, and we'll be looking at the week ahead, so key events looking forward as well. Okay, so this week in particular has been another explosive week for gold, silver and oil. We've seen some massive moves which we'll talk you through very shortly. Okay, so right at the moment, the gold price currently, just this morning, it's actually sitting at $1,394 per ounce. So gold price dropped below 1,400 on stronger US dollar. The gold prices fell just this morning during the Asian trading session after strong US economic data pulled prices lower, while the uncertainty over an immediate US military action on Syria didn't provide enough support. However, gold is still set to book another overall gain for the month of August. Gold price fell 1.12% to $1,395 an ounce by this morning at 7 o'clock GMT, while silver declined 2.51% to $23.53 an ounce. Gold peaked to 1,334 on Wednesday, its highest level since May 2013. Precious metal prices reversed direction on Thursday as imminent US military attacks on Syria, they receded as President Obama said he had not yet decided on response to the Syrian regime's use of chemical weapons against the civilians. Also on Thursday, US dollar index surged following a better than expected second quarter US GDP data from the US economy grew at an annualized pace of 2.5% compared to the previous quarter. And shortly after the release of this data, gold hit its daily low as the US dollar rallied. And I'll show you that very shortly on our charts. We'll look at the US dollar index and what it's doing today and some of the moves that we're seeing. In fact, just looking at my screen, silver is down 2% on the day at the moment. So US dollar rally has certainly caused a bit of a sell-off. As we enter the long US Labor Day holiday weekend, trading volumes in many markets on Friday, they're likely to dwindle today. However, we wouldn't be surprised to see some fresh safe haven demand for precious metals heading into an uncertain weekend regarding the Syrian situation. So we may see a little bit of a lift towards the end of the day in gold and silver. So once US traders return to work next Tuesday, they can expect a very exciting month ahead. Besides the Syrian situation, we've got the important US jobs report out on Friday, non-farm payroll. We've also got the FOMC meeting towards mid-September when the Fed could decide to change its monetary policy. Also in September, US Congress will have to find an immediate solution to the pressing budget matter, and President Obama will also name a new Fed chairman to replace Ben Bernanke. So overall for the week, gold is down, is still on track for 1.1% advance, and it's actually poised over the whole month for a 7.4% climb overall for the month of August, which ties in very well with August seasonality, which we have been discussing for a number of weeks on these webinars. Okay, fantastic. So with that, guys, what we're going to look at now, we're going to move on very shortly to some top trades of the week and live technical analysis. So if it's your first time on the webinar today, welcome. And for those of you rejoining us, great to see you back. A little bit about myself and Nick. I'm Phil Carr, professional trader and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me on the call is Nick Cowsey, a professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, he discovered the formula, mindset, and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've both appeared frequently on financial television. Okay, so that's a little bit about myself and Nick. So just moving on to the gold price this morning. So we are currently at $1,394 an ounce. So we're going to look at that very shortly, just in terms of technical analysis on the charts. US dollar index currently, we can actually see the US dollar index did find support of this 2-year trend line. We're actually currently at the moment, we have had quite a nice rally. We're right all the way back up to the 50-day MA on the US dollar index. Just kissed that actually in the last 24 hours. We've rallied quite significantly. So that trend line holding, very important trend line, which is holding on the US dollar index, is causing a bit of a sell-off across gold, silver. Also seeing that go across into WTI oil this morning, bit of weakness in Australian US dollar and New Zealand US dollar, the commodity currencies. So we'll look at that shortly as well. We were expecting, to be honest, a bit of a dip towards the end of the month. In terms of gold seasonality, what we do typically tend to see is at the end of the month, we do get a little bit of a sell-off. Probably you've got a number of reasons for this, but profit taking being one of those reasons as well. So on the seasonality chart here, you'll see August played out exceptionally well with regard to the gold futures seasonality 32-year chart. So you can see here where over the course of the majority of August we have had an exceptional rally. We peaked this week actually on Wednesday at $1,434 an ounce, and you can see where we've just had a bit of a pullback now, which is pretty much in line with seasonality. So we've had a pullback now this morning. We're at 1,394. It's about a 300 pip pullback, which leads us perfectly on for potentially the next leg up in September. So that's something we'll be monitoring very closely, and we're talking to that in the chart very shortly. In terms of Brent crude oil prices, well, Brent crude oil has also followed seasonality rather well, and we are just seeing that dip as well. To be honest, right at the end of the month, we had some really nice setups, which we'll talk you through very shortly in the last 24 hours, particularly on WTI crude oil, massive pin bar on the daily time frame. Had a really nice opportunity to short that. It's moved 200 pips over the last 24 hours down to 107 US dollars per barrel, and we were really expecting some profit taking and potential reversal towards the end of the month, but we did spike this week on both WTI and Brent, which we'll be looking at, but in line with seasonality as well. We've seen those gains slightly be taken off towards the end of the month, probably due to obviously the Syrian situation and of course due to profit taking at the end of the month. So we'll look at that very shortly too. Okay, so the top trades of the week, we've actually had about 3 additional top trades I could have added today. I'll just talk you through that on the charts because we're still in those trades at the moment. Those are just sell shorts on gold and oil currently, just off their peaks. But we'll just talk you through we've had a lot of day trading opportunities over the last week since last Friday. So you might remember a key level that we were looking at just this time last week. We were looking for a breakout of the $1,385 per ounce level. So we had a key level of resistance. This is actually going back to the 23rd. It's going back to last Thursday stroke into Friday when we hit our profit target. And you can see here where we've just essentially been finding resistance at that level, 1384. A number of occasions we had retest of that level. We finally broke through, and we in fact rallied. Sorry, just to update you, this was Friday. This was Friday afternoon when we broke out. It's about half five BST last Friday, and we finally got that breakout. Pending orders triggered on this, and we came all the way up, and we just came all the way up just to just shy of 1400, but we hit that on the Sunday open. So that was a 50 pip risk for that trade. So 50 pips each lot traded, $500 risk for 150 pips reward, so 1,500 pips profit for a 3-to-1. Really nice straightforward trade on a breakout. We then had silver did exactly the same. So after gold triggered, silver also breakout of this box setup that we had. We had 23.60 as a key level of resistance on silver, and we finally broke out of that on Friday, and we moved up fairly quickly to 24.82, which was a key level of resistance. That was a profit of 122 pips. So the risk on that, 50 pips. Each lot traded $500 risk for 122 pips, so $1,220 profit for a 2-to-1 on silver. Then USD Canadian dollar, as you would expect. So if you see gold and silver breaking out, you're often, the US dollar index essentially was selling off, and that correlates through to USD Canadian dollar as well. What we saw here was just a sell-off. We had a big, on the daily time frame, big sort of pin bar there on the daily time frame, or big inverse hammer you can see on the screen there. We then got a retracement on Monday, which offered a really nice opportunity to get in a pretty good price on that before it fell further. So we just got in at 1.0522, and we've just come out there at a key Fibonacci level, 61.8 retracement at 1.0469. So the risk on that was 23 pips. So each lot traded was $230 US for a reward of 53 pips. So each lot traded $530 profit for a 2-to-1 on USD Canadian dollars. That was just a very quick day trade, in and out, us getting a better price. If you have a look on the daily time frame, USD CAD actually formed 4 inverse hammers on the daily time frame, one after the other. So it was looking very good for a sell short. Brent crude oil, so we caught the breakout on Brent crude oil when we finally broke above the 111.33 US dollars per barrel on Brent, and that was a very quick breakout to the next Fibonacci at 113.13, our profit target. That was hit just within a day, so we had a profit there, automatic profit target, which was hit, 178 pips profit. So a risk of 65 pips on the trade, so each lot traded $650 risk for 178 pips. So each lot profit was $1,780 for a 3-to-1 risk to reward on Brent. This was gold. We had a number of gold breakouts as well, opportunities over this week. So we were eyeing up the next level. You see 1407 was providing resistance on 2 occasions, started to create some pressure around that level. Then we finally broke out the 1408 a little bit earlier on this week, and we had a very short, sharp move to actually spiked up to 1423, but our profit target was 1420 on that. So 120 pips was the profit. So 50 pips risk on that trade, and each lot traded $500 US for $1,200 profit for a 2-to-1. And then we've also had the gold breakout here. So you can see where we've then produced a big pin bar on the daily time frame. In fact, we've got one open position on this at the moment. The price has now come all the way down to our key moving averages just below. So it's hovering. It moves another 100 pips down for over 200 pips. But you can see there that a key level of resistance that we've been looking at, discussed in our live trading rooms, was $1,433 an ounce on gold. We hit that pretty much spot on. And you can see then we started to reverse. We found support at a key Fibonacci level of 1414. From that level, we then, after we got triggered, we just came down very quickly yesterday to 1404. Then we chopped about during several news announcements yesterday. And then overnight, we've just seen a further fall. And we've come down to the key MAs just below there. And I'll show you that on the chart shortly. So that was entering at 1414. Exiting at 1404 on that. That was a day trade. We've got another swing trade. That was a 50 pip risk. So there was a $500 risk for each lot traded for 100 pips profit for $1,000 profit on each lot for a 2-to-1 on gold. So there's been a lot of opportunities to trade both the breakouts, and now towards the end of the week, in line with seasonality and profit taking, we're starting to see this sell-off on gold and silver and oil at the moment. So we'll talk you through that, but there's been a lot of opportunity this month. August, always a busy month for commodities, not so much for some of the other markets, but commodities, fantastic. So yeah, we hope you caught some of the moves over the last week. And okay, finally, we will talk about the breakout that we caught as well from the 1424. Again, this was something covered in our live trading room, and this was a breakout. It was just a very quick in and out on this trade. 1424 exiting at 1433 for a 90 pip trade, so 50 pip risk on the trade for $500 risk for 90 pip gain, so for $900 gain on each lot traded for a very quick 2-to-1. That spiked very quickly. We were in and out that trade very quick. Okay, so with that, we're going to move across to some live technical analysis, guys. I'm just going to take you across to my platforms. Okay, so I'm just going to share screens. Okay, fantastic. So on the screen at the moment, this is just the Gold and Silver Club. This is our custom-built Reuters news trading. So what you'll see here, the top right-hand corner, we've got the movers, top movers of the day. So you can see automatically red, big red on silver and gold. So silver down 1.8.7% today, gold down 1.35%. We can see that WTI down, New Zealand US dollar and Australian US dollar. So you've got a lot of reds across the board at the moment, apart from US dollar index and USD Canadian dollar, which you would expect because of the correlation in those two markets. Okay, so looking at the US dollar index, what it's doing at the moment, we're just going to bring it down into 6-month time range. So you can see here, this is where we kissed basically that 2-year trend line again, didn't break it. We've then found our way all the way back up to key 50-day moving average on US dollar index. And so this big move up yesterday with the US dollar index, which correlated with USD Canadian dollar as well and correlated with the sell-off in gold and silver, this is really what has helped to cause a sell-off in those markets. So we'll be watching the US dollar index quite closely at the moment. You can see there's not too much movement currently. We've got a small hammer on the daily time frame, but we'll be monitoring that over the course of the day and see what setups are provided. So moving on to the technicals here, just going to go on to, okay, so first market we're going to look at is going to be, actually I want to take you across first of all to WTI oil, because this was a really nice setup that we had just yesterday. So we saw WTI oil, we had this major level of resistance just around the 109 level, which broke through. It spiked through on, I believe it was Wednesday, where we actually spiked through and we got a big move to the upside, and we can see where we rallied all the way to 112. Now, you would have had to be exceptionally quick to catch this move, because if you're based in the UK, by the time the morning market opened, this had already come all the way down and caused this like big pin bar on the daily time frame. So you can see here, just by the retracement levels that we got, we found ourselves yesterday that we were right. You could see what we had confirmation, and we broke through the low of this pin bar, and we had a really nice sell-off, and we've actually come down to our profit target overnight of 107. But there could be further weakness at the moment in WTI currently. But the key levels to be looking out for at the moment, really the trade here was the break of the 109. What's probably happened is there's been a lot of shorts around the 109, which were basically popped out of their positions. We saw WTI very quickly come all the way up, a $3 move to 112, but you would be wrong to try and jump on the back of that breakout afterwards, after it had popped up already, because I know Gold and Silver Club, we've done some analysis in this. There was quite a lot of analysis or traders saying that it was going to spike all the way up to the 115 level or the 120 level. You know, we haven't seen that at all. You would have known that just from the daily candle, which was formed, which is particularly bearish there. So we're taking advantage of the sell short. So key levels to be looking at the moment. We're going to be looking at any retracements back to the 109 level on WTI, and also if we continue, we're going to be very interested in where we close today. You can see a bit of a hammer forming on the daily time frame here, as probably as traders are taking profit from the shorts. So we'll be watching key levels of 107, 105, 77, 104.25. But we're just sitting around some key moving averages today. So to be decided, but we've kind of taken our profits off this at the moment. So we'll be monitoring WTI. Just wanted to talk you through that trade setup that we've had this week. So just again, in summary, the key level to look at 109 to see if we get a retracement back to 109, and if that presents resistance now, and we see further fallout back to the 107 level. That's what I've been looking at more in the short term. Okay, moving on to gold. So here's gold seasonality charts. So I was just showing you earlier on the gold seasonality. So you can see here, sorry, it's a bit white on your screen, but hopefully you can see that. So you can see August seasonality has played out. So we had this big move throughout the whole of August on gold. So overall where we're at now, it's over a 7% move for the month. And we can see here, we're just getting that dip down at the end of August, which we expected to see. So we may start to bottom out around where we are, the 103.90. There's some key levels actually we'll have a look at before the weekend. So where we're at right now, the 103.94 level, we are coming into some key moving averages where the price is, and there is some support around this level, so around the 1390 level where we found ourselves on Monday, that this was a level of support and providing support before we broke through 1400 again. So that's where we could find some support. If we continue to see some weakness, the next level would be the 1385 level as well, where we found this is where we had the breakout last Friday. So we've got a few support levels, and below that the 1373 levels. So these are the key levels I'll be looking at as we continue the downtrend here. But you can see here very clearly where we spiked up to $1,433 an ounce, came down to 1415, sat on that Fibonacci, and then we've just broken through over the last couple of days, and that's produced a really nice sell short up around 200 pips on that at the moment. So that's what we're looking at on gold currently. Obviously moving into September, if we start getting some breakouts, if we break above 1433, we're then going to be targeting in the shorter term 1450 level, and then we'll reassess more key levels with you next week. Okay, moving on, we are going to look at silver. So similar situation actually with silver. So silver's also produced a nice pin bar on the daily here. You can see we spiked up and we've just gone, this is our profit target on the long, 24.82. We spiked up beyond that, and then we've been provided with a nice opportunity to take advantage of profit taking at these levels. We're actually just come down to some key moving averages this morning, and we're starting to find a little bit of support around the 23.50 level today. So we might find that silver is going to get supported around the 23.26 level. And we'll be interested to see if there's going to be some buying a little bit later today as we move into the weekend with everything going on, the geopolitical news at the moment around Syria. We could see some more safe haven buying moving into the weekend. So we'll see. But at the moment, these are key levels to be watching, just around 23.30 level at the moment on silver. And if we do get a breakout, I'll be looking for a breakout back above the 24.82 and back above also 25 level, which is where the market just basically stopped at. So 25 above that, you've probably not really got a lot of resistance until we get to 26. Then 26 is going to be a very important level. That was a key level of support throughout the last 18 months before we broke $26 an ounce. So that could provide some very interesting setups, certainly event area at $26 an ounce. So that's what we're looking at on silver. Moving on to USD Canadian dollar. So we've had some nice moves on USD Canadian dollar, moving very well between key levels of support and resistance. You can see at the moment we just come back up to resistance. Not much volumes on that today at the moment, just little doji on the daily time frame. So be looking to see if we can get a breakout towards these. If the US dollar index continues to rally, we may get a breakout back to the highs of the last 10 days, which would be 1.05665. Or we may see a breakout all the way up to 2013 resistance, which is 1.06061, and then we'll be looking to see if we're going to get some setups around those key areas. If we get any pullbacks, we'll be looking just back to this Fibonacci level here at 1.04673. So that's what we're looking at on USD CAD, starting to form a bit of a box actually. So looking really for a breakout of this either way. So we'll see what we get on USD Canadian dollar in terms of breaching these key levels. At the moment, we're range bound for the last 5 or so days. So we'll be keeping an eye on those. Next, we're going to move across as well to, let's have a look at actually we'll look at New Zealand US dollar first. New Zealand US dollar, staying the overall trend here, very, very much bearish on New Zealand US dollar. We are coming into some areas of support below. You can see these two key fib levels just below that. We've got just above 0.7110 and 0.76731. So it does look, we've got an inverse hammer on the daily there. You've got some bounced off some key MAs over this week. It looks like we are starting to look like we are going to come down a little bit lower, but we may just only come and test these weekly lows. As you can see, we've just come down there. We're coming into quite a lot of area of support on New Zealand US dollar, so I'm going to be looking for potential profit, traders taking profit at these levels. We might get some reversals for day trades, but the overall trend is down. Going to be very interested if we break through 2013 support here. So monitoring New Zealand US dollar. not looking to take any longs on this at the moment. It's looking bearish, but likewise for sell shorts, not providing very good risk to reward either. So Australian US dollar, bit of indecision here, but overall trend is down. You can see again key moving averages providing some resistance. We are breaking down, but we are coming to some support, bit of a support zone as well for New Zealand, for Australian US dollar. So we shall definitely be monitoring that. The sell side on Australian US dollar. At the moment, though, again, similar to New Zealand US dollar in that there's not a great deal of, if we do break down, we may come down to this key Fibonacci level below, just to 0.88468, which is also the 2013 low. So if we get a break of this support just below, that's something which you could be keeping an eye of, but the overall trend is certainly down on Australian US dollar. Okay, so in summary, guys, really the ones to be watching today is going to be, certainly we're going to be looking at gold to see if we're going to find some support now around the 1390s to 1385 level. Similar situation really on silver as well, as it's coming down to test around the 2330 level. There's been a lot of day trades this week. There's been a lot of opportunities to go long, short, well, predominantly long on gold and silver just until yesterday. Been some nice breakouts on Brent and sell shorts as well. So there's plenty to be keeping an eye on next week as well. Okay, and with that, guys, we're going to look and we're going to see what key news that we've got moving into next week as well. So just going to have a quick look at that. So key news looking at the week ahead. So on Friday today at 1:30 p.m. we have the CAD GDP. That measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. It is the broadest measure of economic activity and the primary indicator of the economy's health. Canada releases fresh GDP data on a monthly basis. So a higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. And that's important because CAD is correlated to gold and oil prices. Then today at 2:55 we have the Michigan Consumer Sentiment. That index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. The preliminary data tends to have a greater impact. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Then next Tuesday, 3rd of September, we have the US ISM Manufacturing Index. The index data is compiled from a survey of approximately 400 purchasing managers and manufacturing industry in the manufacturing industry. A level above 50 does indicate industry expansion, below indicates contraction. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. Following that, we also have next Wednesday, we've got the US ADP non-farm employment change. That's going to be important. The ADP National Employment Report is a measure of the monthly change in non-farm private employment based on payroll data of approximately 400,000 US business clients. That released 2 days ahead of government data. It's a good indicator of the non-farm payroll report. The change in this indicator can be very volatile. Higher than expected readings should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Then we have Wednesday, 4th September, US crude oil inventories. That data, very important for you guys trading oil. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. And then next Thursday, 5th of September, we have the US natural gas storage. The Energy Information Administration natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. While this is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector. And that's important because the CAD is correlated to gold and oil prices. And then next Friday, we have the CAD employment change. That measures the change in the number of people employed. Job creation is an important indicator of consumer spending. So a higher than expected reading should be taken as bullish for the CAD. A lower than expected reading should be taken as bearish for the CAD. And next Friday at 1:30 we have US non-farm payrolls. That measures the change in the number of people employed during the previous month, excluding the farming industry. So this is going to be a major one. We'll have the prep beforehand. We'll have a look at that just before non-farm payroll. So do make sure you join us for next week's webinar, and that accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. The next Friday, 3 p.m., we have CAD IV PMI. That index measures the activity level of purchasing managers in Canada. A reading above 50 indicates expansion. Reading below 50 indicates contraction. Traders watch these surveys very closely, as purchasing managers usually have very early access to data about the company's performance, which can be leading indicator of overall economic performance. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. So a lot of key news coming out next week. Monday might be a little bit quiet with Labor Day, but other than that, the rest of the week is going to be very volatile. So there's going to be lots of trading opportunities for you guys. Okay, and finally, also, if you'd like to find out more details of our live trading room sessions that we run here at the Gold and Silver Club for all of our traders, we've got a few questions there in the chat about that. So if you want to find out more, guys, very simply, to request information on our Gold and Silver Club live trading room, you can just go to our link here, www.jointhegoldensilverclub.com. Do contact, or you can contact us on the following numbers. So either our London office, 0207 193 0403, our New York office at 1646 808 0403, or our Johannesburg office at 2711 083 8403, or do feel free to email us at office@thegoldensilverclub.com. So if you'd like to join or find information about our live trading room program, again, you just go to the link, just jointhegoldensilverclub.com, and you complete the form to request further information. And of course, guys, do take advantage of our free weekly newsletter. At the Gold and Silver Club, you receive free gold, silver, oil, and commodity currency news, live market analysis, and prices. Okay, fantastic. So with that, guys, we wish you good luck for the rest of the day's trading and next week's trading as well. And if you need anything else, just get in contact with us on the details on the screen. Okay, fantastic, guys. Okay, well, so with that, have a great weekend, and we'll see you on the next one. Cheers, guys. Bye-bye.